News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moskow.
Karen, markets around the world are headed for a third day of deep selling after President Donald Trump's tariff announcement on Wednesday. But the president and his team appear undeterred by the investor reaction. Trump says his trade policies are already paying off.
Because of the tariffs, we have $7 trillion already committed to be invested in the United States, building auto plants, building chip companies, and all sorts of companies are coming into our country at levels that we've never seen before.
President Trump spoke aboard Air Force One last night, as heard here on Bloomberg, and his economic team fanned out across the Sunday political shows to defend tariffs. Treasury Secretary Scott Bessent said he's not worried about the sell-off.
We had record volume on Friday, and everything is working very smoothly. So the American people, they be very take great comfort in that.
Treasury Secretary Scott Bessent appeared on NBC's Beat the Press.
Well, Nathan, on ABC's This Week, National Economic Council Director Kevin Hassett acknowledged that tariffs could boost inflation in the short term.
Well, there might be some increase in prices, but the fact is that if there were going to be a heavy burden on the U.S. consumer, then this trade deficit that for 30 years we've seen really since China entered the WTO would be something that would have gone down.
And on CBS's Face the Nation, Commerce Secretary Howard Lutnick said the so-called reciprocal tariffs on some 60 nations will arrive on schedule this Wednesday.
The United States of America is going to protect the people who invest in America. This is the economy of the world. We are the consumer of the world, and companies need to build it here, and we will protect them for building it here.
And you can hear Face the Nation this week and Meet the Press every Sunday on Bloomberg Radio.
And Karen, as the White House continues that defiant tone, markets continue the sell-off, and several experts are weighing in this morning. Bloomberg's John Tucker begins our global team coverage in New York. John, good morning.
And good morning, Nathan. Libby Cantrell of PIMCO says tariffs aren't going away. As she puts it, they are high, and they will be high for a while.
There's going to be stickiness to these tariffs. And even if there are some negotiations and some concessions along the way, I think the direction of travel here is very clear.
Mohammed El-Arian, president of Queens College, Cambridge, says uncertainty dominates the markets.
The hardest thing for the markets right now is not only to try to evaluate where the destination is, but how bumpy will the journey be.
Hedge fund billionaire Stanley Druckenmiller and Bill Ackman are slamming the tariffs. Ackman of Pershing Square, a vocal Trump supporter, says bluntly the new trade regime is a mistake. He added, this is not what we voted for. Karen Georges, an equity fund manager at EchoFi, says it may feel like COVID again, but this sell-off is man-made. A strategist at Morgan Stanley say investors should be prepared for the S&P 500 to drop a further 7 to 8%. If the S&P 500 falls another 5% today, this will mark the worst stretch since the market meltdown of 1987. And futures do indicate last week's $5 trillion wipeout isn't over. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. Checking some of the stocks on the decline this morning. Shares of Tesla down about 7%, NVIDIA off by 4.5%, and shares of Microsoft, Meta, Amazon, and Alphabet down roughly 4%.
And Karen, bets are increasing on Wall Street that the Federal Reserve will need to take action and cut rates. Bloomberg's Lisa Mateo continues our team coverage. Lisa.
Hey, good morning, Nathan. So traders now expect policymakers to slash interest rates another 5 times this year. According to overnight interest rate swaps, markets pricing in 125 basis points of easing by year end, which is equal to 5 quarter-point moves. Now, Bob Michael, global head of fixed income at JP Morgan Asset Management, says the Fed can't sit on the sidelines. He also added that they may have to cut interest rates before the next meeting in May.
We already know that businesses in the lower rated end of the quality spectrum have been struggling. When you look at private credit and look at the percentage of amend and extends, it's very high. What happens when their cost of funding just ratcheted up another couple percent and they're going to see top line growth come down as well as their input costs go up? I think this is a serious moment.
Now, TD Securities also pulled forward its policy easing expectations. In a note, strategist Oscar Munoz wrote that the brokerage is advancing its forecast for the rate cut to June from July and now expects the committee will ease rates at each meeting through May 2026. But not all experts feel the same way. You have in a post on X, Double Line Capital's Jeffrey Gunlock. He said he does not see a single cut anytime soon unless the losses and risk assets greatly increase. Lisa Mateo, Bloomberg Radio.
All right, Lisa, thank you. Well, stocks are selling off around the world. The hardest hit this morning is in Asia, where stocks in Hong Kong plunged and stocks in Japan fell into a bear market. Let's get the very latest and check in with Bloomberg's Jill Desis, who continues our global team coverage in Hong Kong. And Jill, please give us an update on the carnage.
Good morning, Karen and Nathan. Yes, it's been an absolute bloodbath in Asia this morning, throughout the entire day, really. The Nikkei 225 stock average in Japan slid into a bear market, as you mentioned, that blue chip index closing down 7.8%, experiencing its first bear market since August. That's back when the Bank of Japan unexpectedly hiked rates. We're also seeing quite a lot of fallout in China. That's where a closely watched gauge of Chinese shares in Hong Kong tumbled nearly 14%. That was also entering a bear market. We've seen some similar stories in Taipei, where TSMC really led losses. Also, India has also experienced some fallout today. I mean, really, what investors here in Asia are experiencing, what they're trying to gauge here, is not just the impact from these tariffs, the Donald Trump tariffs, but also what kind of reaction we're really seeing in region. It's really China, I think, that's really kind of led this region here. Just a couple of days ago, launched a bunch of retaliatory efforts, including measures to introduce a 34% tariff on all American goods starting April 10th. That's sort of led to fears that this trade war is really just going to escalate. Donald Trump has really sort of hit back against that, ended up sort of calling off what he said was a deal to reach a sale for TikTok. So you're really seeing a lot that's developing there. We'll have to see whether this continues to spread out through the rest of the week. We're still waiting to see how other governments in Asia are ultimately going to respond here. In Hong Kong, Jill Desis, Bloomberg News.
Jill, thank you. Stocks in Europe are feeling the pain as well this morning. Bloomberg's Ewan Potts continues our global team coverage from London. Ewan, good morning. What's the latest there?
Nathan and Karen, European investors will have had a heads up from trading in Asia that today was not going to be a good start to the week. Stock markets around the region opened in the red and a stampede from global equities gathered momentum. The Stoxx 600 currently down 5.9%. The index now less than 3 percentage points away from a bear market. Surveying the damage around the region, the DAX in Germany off 6.4%, the CAC in France down 6.3%, and the FTSE here in London down 4.8%. All 20 industry groups trading lower. Defensive sectors not proving a place to hide out this morning. Worst hit as things stand, energy, industrial goods and technology stocks. For any trader who can take their eyes off their plummeting investments this morning, worth watching for headlines today coming from Luxembourg. European Union trade ministers are meeting there to discuss their response to President Trump's tariffs. Spain's economy minister telling Bloomberg today that the EU needs to be open to all potential means of retaliation. Live in London, I'm Ewan Potts, Bloomberg Radio.
And that's news when you want it with Bloomberg News Now. I'm Karen Moskow.
I'm Nathan Hager, and this is Bloomberg.